Yeah, the fishing's a bit better in Florida, right?
Yes, if I had time to get out in the boat and the trailer didn't break parts all the time. My God, actually, if you don't have time to get on your boat, everything on the trailer rusts out, and when you go to move it, it fails. So that's what my
Yeah.
fishing is like. But I miss the trout fishing and things of being in New England. But I don't know. It's nice living down here. Uh, by the way, actually, a lot of automotive folks are over here. Destin, Florida, was where E-Leads
Hmm.
was stationed for a while
Yep.
before the CPA thing. And my neighbors, two of my neighbors, are own small dealer groups. So that's kind of, and actually, that's part of the reason we moved down here is they talked us into it. Uh, so a little hard
Yeah,
to get out.
I visited I think maybe twice I was at the Elite offices
Hmm.
down there. Yeah, moons ago.
Hmm. Um, anyway, so
That was
by the way,
the Mile One days.
well, that's probably one of the biggest mistakes I ever made was not riding the coattails of David Metter. Uh, I enjoyed working directly with Chip, but I think David would have been a hell of a lot of fun. Interesting.
He's doing a lot of what's the right word
Bahama
for it?
trips,
Well, yeah,
Italy
that.
trips. Yeah.
But he's doing a lot of guiding for corporations right now.
Hmm. Well, then I probably should talk to him a little bit, and maybe when I retire out of LotLinx, we'll do something fun.
Yeah, give them a shout.
I don't know about you guys, but I mean, I have no desire to retire.
Not
I don't know if
until
we're
like
all going to be able to
really
afford to
old,
retire.
really
Right.
old.
Uh, my father didn't actually; he kept on going and stuff. Um, anyway,
I
Yeah,
think
at least
almost
something
all the
part
men
time.
in my family uh, never retired.
uh,
Kept rolling to the end.
do you actually grow up in an automotive space? Because that's I did,
Yeah, I did
and
too.
mom and dad, or
Yeah, the whole family. Wait, here we go. 3 seconds, guys.
okay, got
Yeah,
it.
checker flag.
All right. Hello, everyone.
Hello.
All right, hey,
Now it's official, Tom.
all right. So, hello to everybody. Thanks for
Yeah.
taking your time out on a Friday.
Yeah, and certain people like Drew Mint, who are here almost every Friday.
So true.
Yeah. So, Tom, I wanted to just kick things off before you introduce yourself because this is your first time on Refresh Friday, and
It is,
so we
and
do
I'm not
require.
so sure. Well, what I don't know is that I've known both of you for like a gazillion years, like over 2 decades, right? And this is the first invitation.
Our apologies.
Yeah, you know,
Just
how did,
messing with you.
well, now you got me thinking. How did that happen?
Oh,
but,
but you
but
said you retired for a while, so
there you go. So you're just reaching for the bottom of the barrel now. That's all. Anyway, go ahead.
well, you can dish it out. We can take it. So one of the one of the things that we've been trying to do at Dealer Refresh this year, and we've done it a few times over the past years. We just haven't done it yet this year. Was like a state of the inventory, especially around used cars, is where we've been focused in the past. But with Tom here, we can talk about new cars too, which is pretty cool. So um, one of the things that I think everyone should get prepared for today is that um, I think the three of us on the screen right now, we share a similar opinion now that the future is not heading back to the normal world that we knew prior to COVID. So that 2019 world. The future is going somewhere else. And I think it's time that we start thinking about where that somewhere else is. So,
Mhm.
so Tom, welcome. And who are you? And good to see you again.
Yeah, give us
So,
the lowdown.
well, I think most people that know me really well would have remembered my old nickname of being the mad scientist at Cox for many years. And I think when my dad had his store, that was probably actually the reason they didn't want me uh, in the store. I was always inventing things and trying to figure things out and so forth. But I had a wonderful ride with Cox, especially with Chip Perry for nearly 20 years there, and it was good. Actually, I got chance to play with a lot of data and things like that. But took a retirement package out of there, then went to go work with a fairly large, successful, one of the best operating independent groups in the country, and was working with them on improving their game or so. Um, and at one point, actually, it just years ago, actually, I was in a meeting. I think it was a digital dealer or something, and there was this guy, Len Short, up there talking. He was trash talking one of my brands, and well, that never cut it with me. So,
And
I
I can
lashed
never
out.
imagine Lynn doing that.
So I lashed out at him in the meeting and everything else. Basically, he was saying actually agreed with him, but anyway, lashed out at him. And anyway, Roscoe winds up kicking me out of the event there. And then Len comes up to me and says, you just put us on the map. Thank you for that. And at that moment in time, the two of us knew that eventually our paths would cross again, and I'd actually work there. And I tell you, one of the best opportunities in my career has been actually working at LotLinx. It's a wonderful company. The company culture is fantastic. It's a great team environment, and they're always doing something that a mad scientist like myself would love. So, with that, actually, I have a lot of things to talk about. Some more eye-opening ideas and things, especially in today's climate. Anyway,
Great.
that's me. I'm a car guy. 1976, first auto show.
Nice.
Nice.
Well, LotLinx has definitely done a lot to provide data for the industry, and the consistency in what it provides there has been something that I've thoroughly appreciated for years now. So,
Well, it's when I came into the company, um, they'd already figured out a very good business model, right? But what they fully didn't recognize at first is that they were looking at the daily transactions of 2.5 to 3 million units on the ground, what they were doing, and how much demand was happening, and supply, and so forth. And I said, this is a gold mine. But their fundamental business model was actually really, really sound. They had a belief uh, many years ago, set up by Len and Lance and Rob, that advertising a specific VIN was the most efficient way of achieving a good return on investment. And of course, here I'm coming from like an auto trader perspective, and the world works very differently, where 80% of the traffic goes to 20% of the inventory. And LotLinx actually understood very early on that the inventory that doesn't get seen sometimes actually will struggle on the lot, and car not seen is car not sold. So they figured out that business model, and they also understood actually sticking it to the walled off gardens in our industry. Just like some of these other companies, but like the Google, Facebooks, and things like that of the world, actually monetize by showing the inventory that actually is most successful at earning clicks and therefore their revenue. And so, uncontrolled without actually some sort of tempering, you can easily like spend $2,000 on a single car, and it's hard to even see that in motion. Anyway, so those are things that LotLinx actually figured out and did very well. But the evolution of the company is over the last 5 years, 6 years, it has really turned into a data company. And actually, I wouldn't even say really a data company. It's actually a company more geared to trying to maximize profitability for dealers on the variable ops side and things. Well, and we'll talk about why that's happening and why it's probably a good moment for us as a company.
Great.
Good.
Mhm.
So, how about we start with some really high level things before diving in, because this deck that
Yeah,
you sent over is
yeah.
very in depth.
Well, I'm a data guy.
Yep, to be
So
expected, right?
I'm a data guy. Sorry, audience, if you don't like this, but I'm going to show you a few things that are going to make a difference in your lives, I hope. Um, but what gets me at the moment is actually everybody saying, oh, we're returning back to a new normal. Well, I don't know what that really means because, if they're talking about actually new car inventories are finally actually getting metal off the lines and everything else. Okay, yeah, that's a nice change and everything, right? But there's nothing normal about this market right now. And um, and so I don't, when uh, some of the pundits talk about the market, they're talking about like the middle, the average. And so you'll see actually, like even in the quarterly reports by the public companies, they're all achieving anywhere between 5 and 7% return on assets, on front end gross or whatever. But uh, that's the average. And so if you look at the industry just based on the averages, you don't actually see that it's totally unbalanced. And so the first measure right there is looking at day supply. And you can do that on the new car side and used car side. And I would actually encourage the audience, we just are producing a really groundbreaking set of reports by manufacturer that talks about day supply and demand in the marketplace. And you can download it for free. It's called Vincensus. It's a really beautiful looking report that talks over month changes. And at the top of the report, what we do is we talk about, well, what does day supply look like? And you'll see Toyota and Kia, Honda way on the tight side of day supply. And way on the other side, you see Ram and Jaguar and things that sitting at really high day supplies. Well, that wasn't there during the COVID time period. So what the heck happened? And I would actually argue that at least on the new car side, we can talk about increases of production and so forth. But um, what happened in that transition is that profitability during COVID was way up. Um, we as an industry, we're making a lot of money. And so what happened is ramp up of vehicle prices became the new norm, but also over optioning of a lot of new cars, especially on the pickup side. The luxury cars and everything else, they became movie theaters inside. And
Yep.
so is this, at the same time, actually, though, you see interest rates climbing, and affordability actually really is the biggest issue. So in the last year and a half, there's been massive shifts by consumers moving from very highly optioned types of vehicles in the marketplace over to like the Toyotas and the Kias and these value brands that have actually really good products on the marketplace, right? So that's one of the fundamental shifts right there, and you see that in like Toyota saying record volumes and so forth in the marketplace. So those dealer groups that favor some of those low day supply type of brands are probably crushing it, right? And the ones that are highly option, over on the domestic side, especially with like Ram, Jeep, Chrysler, struggling a little bit. I don't think that's normal. And the question is, well, what's going to happen? And so what we're going to see start to happen is some forms of an equilibrium And it requires actually a little discipline from the manufacturers to achieve that. Uh, like, take, for example, the EV market. That all of us could have predicted that you're going to actually, there was a little bit of hype there, right? And
A little bit.
um, you could you could see the overproduction. I mean, demand's growing, okay? The sales volume's growing, okay?
Well,
But
the incentives are getting stronger.
they're outpacing it. And so you could see actually they finally woke up a little bit in August and started slowing down production on things, and let the market catch up a little bit. But that's still a problem right there. Like, take for example, like Kia pushing out that EV9 right now. I think they were making actually all the dealers do at least two or something like that. Um, the sales are not as strong, right? Unless you're in a good market. Anyway, I think that's the macro trends in the marketplace. But actually, some of the brands are actually doing really well. Um, I look at Honda and GMC. I'm a big fan of them. They just seem to have figured out that equilibrium. Honda, just doesn't have to discount its cars even on the new and used side anywhere near as much. And GMC, with the launch of that, the Canyon is actually, I think, doing better than the Colorado even. But the Canyon is, doing great. They picked the market, so the market shifted from an $85,000 F-150 or Ram 1500, saying, you know what, actually, the GMC is not a bad size vehicle these days, and 53,000, I can buy it, a really nicely optioned one, right? So $20,000 price thing. Bottom line is, I really think it's affordability. And changing, of course, demographics, like I think you may have mentioned before.
Well, not live on the show yet. Definitely hop into the demographic side of things in a minute. But there were two other things that came up recently while we're still on the macro side of the conversation. One was Nissan is loosening its advertising requirements. So
Mm-hmm.
they're now saying that dealers can advertise below invoice.
Yes, they're going to need to. I'll be honest with you. And actually, I I'd actually be surprised if forced programs right there, map pricing, whatever, stay with us forever, right there, because the dealers need a little bit more flexibility in reacting into the marketplace. And where I see that actually is in pickups. Without mentioning brands or anything else, but you can see actually some of the brands react very much more faster to changing supply issues than others do. And they're sitting on their hinds right there while the market shifted a little bit, and it has dramatically shifted since October of last year in these areas. But if the dealers are great operators, and so if they are given the freedom to do the right thing and everything else, they'll move metal, all right?
Mhm.
But they need to actually have a little bit more freedom to do that. And Nissan's shift right there is a smart move on their side.
Another interesting one that came up in automotive news, recent article. I can't remember the auto group. I want to say it was Empire, but they were quoted as saying that they were going after 100,000-mile vehicles now at auction. So
Yes.
it's impossible to
Mhm.
get this, the ones the banks crave, which are those less than 70,000-mile, couple-year-old vehicles that they give loans on all day long, but they're hard to come by.
Well, it's actually a very good business model. I have a couple of friends that actually specialize in exactly that category, but in the luxury side of it, and their market, they tune it for real estate agents or others that need to be in a really high quality looking car, but just has a little bit of mileage on it. So it's not a bad actual market. The hard part with that market though is you have to be smart about it. What'll get you every time is actually the recon process, and if you're not actually, if you don't have the methodology and the team actually to move the, things through recon quickly and everything else, you can quickly lose your shirt. Because, well, think about it. Actually, some of those, like, even though you didn't say it, but some of these cars, like the Mercedes and so forth, if you don't get it right off the bat with the pricing of the vehicle, you're going to actually find that you have to discount it much more than you would have had to do so for, say, um, a Korean or a Japanese type of brand. So the safer bet in these areas are you have to fully understand actually not the acquisition price, but the last listed price for vehicles, and set your threshold there, because chances are actually that if you don't get it recon and price right and everything else right off the bat, actually that you can lose money on that. And this, by the way, there's actually some really great techniques actually for figuring out actually what to be investing in. Can I? Do you mind if I segue into that for
Go
a
for
sec?
it. Yeah. Go for it.
And I know it works. So do you remember actually a Moneyball, right? It was
Mm-hmm.
just, or batting averages is are you winning or losing? Okay. What if you just simplify things into two categories? Okay. Which is on a car, never mind back end, but front end. Did I make money? Yes or no? It could be $1 over. I don't care. But put it in the win category if it made $1 over. So that's one. And then you just do a batting average down to the model level, and if it's pickups down to the trim level. And quickly, all of a sudden, you start to see actually where your best bets are. And that's a good story, because what it does is actually tells you that operationally, and that includes actually the sales team, that they have the expertise and experience to move those type of vehicles, and you know what you're doing. So, and then the second one is to measure how many times that you're selling a car below for used cars below 30 days versus over, and let's call it out 45 days for new car, even though often we use 60 for new, but let's say 45, and just put them in win-loss categories. That is a damn good guide of actually saying where do you spend time and money. And I know it works, because when we were in the store, we got the batting average down from up from 72% profitability up to the 95s, just by following that simple discipline.
Yep. Good one. Well, before we shift over at all and look into some brands and any details or anything else on like the general side, like could we do you feel comfortable with this? I should ask, Tom, before I maybe put words in your mouth. Um, could we make a prediction about interest rates and affordability for the rest of 24?
Yeah. Y'all, as an audience, you all know where it's going. There, um, that interest rate thing is not going to change a whole lot, right? And so, and the affordability thing is, it's going to take. Let's say that manufacturers change direction today. You're sitting on some of these manufacturers, like on the domestic side, are sitting on 100-day supply. So we're talking about actually the end of the year before actually, if we could fix that magically and everything else, that we get supply back in check right there. I really love to see actually the industry, sitting on like a 60, 70 days supply on the new side. And when it does, actually, it winds up actually making the used car side actually a little bit more efficient as well, right? Um, so that needs to get in balance, and it needs to get in balance by actually offering the right products that are potentially not over optioned, and then also introducing better leasing programs, especially on the EV side, getting penetration, moving those cars better there. By the way, the opposite is also just as bad right there. That you have some of the brands actually with very, very low day supply, and that's not good either because that means you're missing opportunity, right? That you could have had. Anyway, I think those are the big ones right there. Um, I think we're going to see a lot of shifts between brands. Momentum building. I think BMW has a strong momentum from a product perspective, but you can also see bubbling of it in week over week sales or so. Uh, but there's clearly a few brands that definitely have problems. But bottom line is, what do you do about it when you're a dealer? And let's talk about that.
Well, before we do, I do want to go back on the theme a little bit of, the future is not getting back to what it was like in 2019 because that ship has sailed. And
No, where my advice, and I think our company's advice would be that we have to actually look at um, what we're doing as a series of investments and a little different financial control and operational control than what we did in the past. You, going, thinking that you can actually go back 10 years and get back to like the way we used to operate 10 years ago is not going to bring you success. Having financial oversight in very detailed at the inventory level is actually how you're going to improve profitability. That's what the new normal is going to be, is actually financial discipline and operational efficiency. I think. I don't know. What do you guys think?
I've got a crazy theory. Um,
Go.
so when you think, this comes out of the car business a little bit, and it's a reason why, to your point, Tom, where operational efficiencies are going to be so critical, is that if you think of a country, you think of the United States, our currency isn't the cash that we use, because obviously we take trillions of loans out all the time from the Federal Reserve for that, but and that doesn't matter. But the currency are the people and the resources that we're able to accumulate. So that's what made America so strong, is that we've had a huge growth of population, and we've had great resources. And what I mean by that is like the boomers, for example. So the baby boomer population, I'm looking at a chart over here, it was nearly 73 million people were born into that generation within the United States. And now they're retiring. They're retiring earlier than expected as well. The baby boomers were expected to really start coming out of the workforce and being felt more in 2029, but it got
I have
accelerated due
no,
to COVID.
I have no plans on accelerating that at all. I don't plan on retiring.
Good man. So, take it a step further, Gen X is 65 and a half ish million people. So, you've got a reduction of 7 million people who are the top of the workforce right now. When you think of a population, the age group between 45 and 65 is where you're most experienced in your job and probably earning the top of your income during that time. So that's Gen X right now. Um, with the like, I'm the bottom of Gen X, so I'm just coming into that 45 territory, for example, and the top is up in the in their 50s now, and we're a depleted group of people just in comparison to boomers. So there's less of us, right? Simple. When there's less workforce, there's less workers. Obviously, there's less being generated. There's less capital in the country, right? And this is why inflation is happening, or a big reason for it. The other side of this coin is there's hope behind us because there's this other generation called millennials. And no matter what you think of them, my wife's one, and I love this generation. But no matter what you think of the millennials today, they're not coming into their stride until what year would that be? 2026. But the downside
Um,
with the
they say
millennials,
all those videos actually say they'll never hit their stride, but I'm just joking, right?
Well, the reason for that is because the millennials are about 6 years late to the game compared to the boomers and the Gen Xers. They've been 6 years later on college, 6 years later on having children, 6 years later on getting into careers. And so we're going to have a little delay there. So right now we're in this transition period where the productive boomers are leaving. We've got the Gen Xers who are productive. They've done everything on time, statistically speaking. And now we're going to be 6 years behind with the millennials coming to fruition. So we've got a 10-year span here. It's basically what it is, where um, we'll probably be sitting at inflation levels where they are, maybe,
Yep.
and that breeds interest rates being where they are as well, because the Fed doesn't really lower rates until the inflation level gets below 2%.
Hmm.
So this is why, to your point, Tom,
Yes.
it's not a car industry thing. This is a
No,
global economic thing.
that's why I really feel that it needs to shift over to a much more financial control on things. But hey, you just remind me of something though. Um, what's crazy is actually the number of model launches. Um, it takes a lot of energy to introduce and expose, um, people to a new model, especially on the EV side. They're just, another one pops up again. And they always have strange names, and like Nissan just had one, and I don't even know it. I can't remember what it is,
The
or
Aria.
so. Yeah, something like that. Uh,
Alex is familiar.
Yeah.
but you talk about that demographic right there, and you compound it with they don't even necessarily know what products are available, right? And so this is where um, we see challenges ahead and opportunities for our dealer community because OEMs really aren't always as effective with these new product launches and exposing customers of it. And one of the Lithia, has that was the green something, and it's generating a lot of traffic. And it's one of the piece of advice actually I would give many dealerships is start to separate as a segment their EV business, not only financially but also from a marketing perspective, because it reacts and works very, very differently than
Mhm.
the rest of their market. So I think that's probably one takeaway moving forward is actually to start to separate out segments of your business actually and operate them a little differently from a financial perspective. And what they'll find is um, like you may be getting a 6% return on investment, but probably some of the drag is on that is actually on your EV business, unless on leasing side, it's probably okay. Um, but anyway, a lot of truth to what you just stated.
Well, how about we dive into the weeds a little bit? I think that's where you like to play.
Yeah, that's where I want to go. I want to help people if I can. Um, so I'm going to lead off with something. Um, Years ago, uh, I briefly took a job at a railroad, and the HR system put me in the system wrong, and they put me in there as an engineer. And apparently, there was a strike coming up, so they wanted to take all the engineers and get them recertified on, driving trains. And I got a call saying, "Hey, you haven't been certified. Like you have to go back to school." And so I learned how to actually move a locomotive and hook up cars. And the first thing I learned is that guess what happens when you put the brakes on a locomotive? Somebody's crossing the road in front of you. What happens when you put on the brakes on the locomotive?
It doesn't stop quick.
Yeah, not much.
Nothing, nothing happens.
Nothing. Oh,
Nothing happens. So curiously, for the last 100 years, um, as an industry, we've been using markdowns as a form of promotion to move aged inventory. And we're doing that a lot today. because we actually are carrying over aged inventory greater than we'd had in a long time, especially on like some of the domestic sides, right? Uh, so what we do is we mark down cars, and the expectation, and this is really a myth, that the car sells eventually, right? But the assumption, wouldn't you assume that if I mark down the car, that it would generate new online traffic, organic and say direct traffic, wouldn't you?
Hmm.
Um,
I've seen it
Jeff?
happen plenty of times.
Yeah,
Yeah.
you would think actually that it's going to generate a little demand, incremental demand, but it turns out, like on the used car side, 76% or so of the time, nothing happens.
That's right.
Nothing. It's and so, but the car does sell. But the argument would be actually it's selling because there's probably another spiff on it, or that it's in-store processes that are moving a consumer from one car to another because it's a cheaper option of this something like the same, right? And so what also happens is when you do get traffic on a markdown, that the period of time after the markdown only lasts probably about 4 days, and we're seeing that at scale, millions of events where we're measuring that activity. So when you add that up, the um, the markdown sometimes actually costs you $200. And in fact, actually, the average is like anywhere between $150 and $200 when you actually try doing it in terms of what was the true cost of generating that visitor, and that's crazy. So um, sometimes markdowns are a good option to use, but they need to actually be done with an eye actually to what the market's doing. And that a lot of other times that a better investment is actually to spend it on promoting that specific piece of inventory and move it that way. So that's a really insightful thing that, and you can read up about it in some of our press reports and things that are coming out. But you know, so if you're marking down a car and everything else, you have to actually think about it. Here's another thing about reducing the price of a car, that most of the time um, we see that the first markdown is totally ineffective at actually moving the car. In fact, actually, after that, sometimes the car will take over 25 days or so to sell. And what since we're looking at literally 30 million um, vehicles a year at least, right? And on a daily basis, we've tuned our AI exceptionally well to understand uh, these small macro things. The best operators we see that achieve the highest profitability on a PVR perspective are the ones that actually act initially setting a solid first price at say day 7. They may have an initial price that's above market, but it's day 7 that they actually really nail it, and they may make a more sizable haircut then, but all of their following markdowns are always considerably less, and less the need is less frequent. So by making that shift early on, you can actually move days of sale forward by, on average, 7, 8 days. And so it has a major impact about when it, focus on the operational parts of your pricing game right up front. That the impact actually really is um, greater overall profitability on a PBR perspective, but also higher turn because you're shortening the number of days of sale. And so when you also then finally add a final whammy is that if you take some of these cars that require markdown and put bin specific advertising on it, you're well going to achieve the market. We actually look at the profitability as well as sell down curves on every brand, and clearly can see what's working and not working in the marketplace, and that works.
Hmm.
On the
Uh,
consumer end, um, my wife and I have been in the market on and off for the past couple of years, and there's we check in on certain vehicles, used vehicles mostly on Auto Trader, Car Gurus, cars.
Yeah.
And you set up alerts, like something new has hit the inventory or price is reduced, and those send us back into the sites and looking at cars again. So the markdowns definitely have an effect on the consumer, for
Yes, they
sure.
do. Actually, I put that into the category of generating traffic on the referral side, and um, I think that does do a little stimulation. When I said that most cars don't receive activity online, it's actually the organic and direct traffic that I'm referring to right there.
Yeah.
But it definitely helps. But the impact. Do you know, actually, I have a stat in the deck right over there. But the other one is actually how many cars just don't have a valid price on the first 7 or 10 days that they're listed, especially the first day. And the impact on that also is very sizable. That especially on the new car side, you're extending the days on lot. If you don't have actually a solid price on day one on new car inventory, uh, it extends days of sale by 7, 10 days or so or more. So these are simple operational things that dealerships can manage, control. That the default systems, like when you get new car, sometimes you get overwhelmed with your used car inventory coming inbound. You just got to take the default pricing, right? Um,
Mhm.
but and so you have a fake price for a little bit. Um, if you don't jump on that right away, getting a right price, you're actually increasing the number of age units you will have on the lot later on, because there's a direct correlation between if you don't get the prices set within the first couple of days and everything else, that it greatly extends the number of days that a vehicle is going to be on the lot. And um, again, I think we talked briefly about actually making the first markdown meaningful. By the way, it isn't true always for every brand, because again, like Honda, Toyota, and everything else, and Kia, you don't really have to worry too much about those products, right? Because day supply is just so low, right? Already.
Well,
Um, but but if you're actually on the high day supply side of it, operationally, you got to have a lot of discipline actually in that pricing and advertising strategy right up front. The old model used to be actually we'd wait, we'd mark a car up at 103 percent and hold it there. We still see dealers doing this up until like
Oh yeah.
day 15, right? That you can't do that when you have day supply through the roof. You got to be right there at day 7 or earlier, crossing that boundary below 100.
you want to see something funny. If you go on Auto Trader, for example, and you were to look up just a specific model, and then whatever, this is used cars, and you just sort it by highest price and then sort it by lowest price. Anytime you sort by lowest price, all those cars have photos. When you sort it by the highest price ones don't have photos.
Mm-hmm.
It's like,
Because they
why are
probably
you
just hit the
even
lot.
putting it up there? Right. But to
Yeah.
your point, that's a fresh piece of inventory, and they just haven't gotten around to it yet.
So,
And most of the stuff that you're saying, of course, pertains to used cars. Is it pretty much the same with new cars? I believe in your stat, it
yeah,
was like
yeah,
25% of new cars don't even have a price listed within the first
yeah.
7 days.
Yeah, you want me to put
And
that slide up, Tom?
yeah, it's kind of fun. We have it. By the way, we have a really fantastic analyst that joined our team, um, and she came to us from Moave, a dealer group, and she's just nailing it. I mean, in detail, some of these stats. But uh, also, how long do dealers take to drop below market? And used sometimes it's up to 20 days, new 10 days or so. New, it's actually really hard to say because you know that understanding really what the MSRP is on things. But that's a good one. What else do I have in that deck right there?
Oh God, only 46 slides of stuff.
way too much information. Uh, so, um, so when you actually, here's the thing: if you have a pencil, a used car, she did a lot of statistics and said, well, what if you have a fake price or no price on a used car? Uh, how much longer does that take to sell? And it's 8 days. 8 days. Wow. So what that means is that you're sitting, looking at your carryover from the previous month, and you could have done something about it potentially by doing, working on the pricing there. Yeah, that's a good one.
Oh, these are all great, by the way.
Yeah, the how much slower does a vehicle sell that initially has either no price or placeholder price,
Mm.
new being up to 15 days. It's pretty substantial.
Yes. Mhm.
Yeah. So, Tom, is there anywhere in this deck that you'd like me to drive us to next? There's some. I
Uh,
mean, you've got something on every brand and how they're faring right now. It's a strong
yeah,
deck.
we can go over to, let's see. Okay, wait a second. So I was looking actually at VDPs. What else we have? Uh, we talked about actually the impact of first price changes. That's good. Um, so let me first just summarize a few things actually on the markdown. So again, uh, generally, most times, that first markdown is ineffective at generating any additional demand and requires further markdowns. So if you're going to make that first move, make it count. Um, Otherwise, it actually winds up that it takes 3 or 4 additional markdowns to move something. Um, you know, uh, and you'll know actually which ones that are going to require it because they're the ones that generally have the higher day supply. Or if you do that money ball type of batting average thing, you're going to know that really right off the bat or so. The If you're on the used car side, on markdowns, you can expect like the European brands actually to have a steeper, and domestic to have a steeper discount strategy over time, and the Japanese and Korean greatly outperform the market. That's important. Uh, and what else? I don't have I think I'd rather talk to it a little bit, and then we'll talk about insights as a wrap up. But another way we're looking at the world is from a financial perspective, we're separating what is the profitability of our vehicles that are sold on the used car side, but shorter than 30 days versus longer. And on the new car side, we use a 45-day type of thing. And what's stunning is when you start to segment your inventory in that area, you start to see um, the average days of sale is like 10, 15 days or so on the fresh stuff, of course, but it's like 80 days on the other side. And the difference in profitability on used car side could be as high as 10% difference. So even though profitability is maybe sitting at 6%, the range and difference between selling our fresh inventory versus what we call risk inventory is upwards of 10% difference in profitability. So if you start to actually look at your P&L and statements, I'll help anybody in the industry actually work through this and everything else because it really is an eye opener. You can actually just see how much of a drag carrying over inventory is, especially overstock type of units, on impacting your P&L. So when I talk about, what do you do moving forward? What's the new normal? It needs to actually be looking at, well, where am I really making money? And where am I losing? What segments of my inventory am I losing money? So what that starts to teach you a little bit and instruct you is where do you invest? And do you heavy up actually with in specific advertising, early on to move and reduce your risk. So it changes your strategies there when you start to look at your P&L statement differently like that. That's an important insight.
Well, especially if
Mm.
interest rates are going to stay here for a while, it's those floor plans can
Yes,
days count.
they're paying 8.5%, and they're not getting all that money back. And so when you're holding on to inventory 90 days and stuff, that definitely hurts your profitability there, right?
So
When you're touching on the risk, I guess you got your non-risk inventory and your risk inventory. Can you just go into that a little bit more deep? I was looking at some of the slides. I think it started like 36. Maybe you could dive into that a little bit.
I can bring it up on the screen. I love doing analysis like this. And there's a couple of guys in the industry now that like Lot Pop and stuff that look at, well, how much of your inventory is actually fresh versus down below the line. We show how much of your inventory is not fresh. And so when you try to do this actually like on a weekly basis and things, you can actually start to see um, that, hey, I'm starting to build up too much inventory that it's going to become risk units and things. So when you compare what's happening, I think this is probably, if I look at this slide, it's probably actually a brand that's doing fairly well because this one's really not a problem. But when you look at that risk inventory down below, that when you go to sell that, um, let's see, we're shooting for like in industry, we're doing about 3,400 PVR on average. Um, some brands, operators like Penske are just crushing it at way over 5,600. But like the Sonic Automotive, Group Automotive, Asbury, they're all sitting at like 3,300 PVR. But when you break it up into risk and non-risk, like this, all of a sudden you see actually what a drag um, the risk inventory is holding. So if you're only making $200 or losing money on your risk inventory, but you're making a bunch on the other, when you add a zero to something else, actually is a pretty big impact. So this is why I keep going back to playing the profitability game of did you win or lose on something. How many times are you selling units actually that are above, say, 30 days or so in doing batting averages on this? Because when you look at the financial impacts right here, it's substantial. And an additional part right here is for whatever reason, actually, that aged inventory seems to accelerate right there. The fresh stuff's always going to sell, but the aged sometimes actually going to keep on going that way. And um, you need to boost activity and visibility to that to move those cars because by itself, whether it's on Auto Trader or your own dealer website, the amount of views you get on that aged units actually drops, right? And so you have to stimulate demand artificially on that and bring attention to it. Um, so I don't. So we actually measure. You can actually go to that next slide right there, and I'll show you like what the impact is really on that. So on average, as an industry, we're shooting for about a 6% return on investment. And we measure this actually over time. But then your non-risk units, your fresh inventory, is generating 10%. But your risk inventory, depending on whether it's new or used, can be making no money at all, right? And so we wind up at 6%, but it's actually those EVs. It's on the new car side. Used EVs actually sometimes are pretty profitable. Uh, one of the technologies our company has created is we have our own version of estimating front end gross, and I'll be darned if it actually was within $2 of industry benchmarks, literally like $2 or so. I was really crushed, but it's a really sophisticated AI system that we use for predicting what the gross is going to be on a car. And we
Wow.
use that for helping advise on where to do promotional investments or so.
Hmm.
Makes sense.
This is a game changer, guys. Nobody else in their industry is doing this. Looking at risk in and how it actually impacts financial returns or so.
Hmm. There's so much in this deck. In fact, I would encourage anyone to take Tom up on his offer to hit him up on what it takes to look at these things from a P&L perspective, but not just that, just like, see this deck. There's some really strong things in here.
Well, we have a really strong account team too. They're pretty good financial stewards as well. Hard finding team members like that, but we have solid people. We're glad to actually have any conversation with anybody though at any time or so.
Yep.
I think the key takeaways I would like to actually have people say is that the industry is telling you that things aren't right and supply is going up, or else used cars. Trying to find the right used cars is hard, right? And it is. But I also feel that you can actually really change things a lot. We've actually have quite a number of clients that are way on the north side of the industry of like day supply, and by careful discipline of actually applying pressure to the right bins, advertising wise at the right time and everything else, we can see that curve that you showed earlier. Right there is where they had really high carryover inventory or in overstock. Is we can actually see that we're moving the needle week over week over week, improving the financial health of that dealership, and you can do something about it. And I think it really starts out with actually being cognizant that if you're actually selling brands that have high day supply, you actually have to get your pricing game going early and smartly right up front, and dovetail it again with disciplined bin level type of advertising. And if you do that, you're going to see actually the profitability start to go up. You can do something about it, and you don't have to listen to these pundits actually drag you down. I love it. You run into some pundits that just suck the oxygen right out of a room, right? And you know, bottom line is you can do something about it.
Hmm.
Yep. I think anyone listening here is looking to do something about it. This is the smarter group. You're listening to Dealer Refresh.
You bet. It's great.
So, Tom, how could somebody get a hold of you?
Oh, they call some 800 number or something like that. Find me on LinkedIn, but I'm easy to find. Thomas, Thomas, period, Gage at LotLinx.com. Really easy, available. Um, I love listening to customers, and more than willing to help.
Cool. And if
That's
anyone
great.
missed that, you can always ask Jeff or me on Dealer Refresh, and we'll get you
But
to
I also
Tom.
I want to
Yeah, we'll
encourage
have
you.
the information posted.
I want to encourage you all. We just released again this set of reports called Vincensus, and it's an industry groundbreaking set of data. It talks about actually at a model level, actually by brand, new and used, what has the highest day supply, and so forth, and month over month trends. And then very soon, we're going to be launching a risk report for dealerships to just put in a request, and we'll send it on a weekly basis, and it actually analyze their inventory, especially relative to their peers in the marketplace. We know the marketplace. As I said, 30 million VINs, man, and on a daily basis, the 2.5 um, will help.
That's great.
Well, I know you can get the Vincensus report, the most recent one, on LotLinx website, and then also click any LotLinx banner on Dealer Refresh. I believe that takes you there too.
Excellent.
Believe so.
Yeah.
Well, guys, thank you so much for hosting me today. Hopefully,
It's good to
it
see you,
turned out
Tom.
information for you all.
We won't wait 20 years for the next one with you. How's that?
That's all good. All right.
Thanks, everyone.
All right, guys.
Thanks.
Have a great weekend.
Thanks.